Hi, everyone. It's Jon Gengle, Financial Advisor with Bayntree Wealth Advisors, here at the end of 2022 with the year-end planning 401k educational webinar. We thought it would be a good idea, as always, to put together some items that you might want to review prior to the end of this year and things you can think of moving into next year. Take with you beyond just what you're doing within the 401k to hopefully optimize and maximize what you're doing in terms of overall financial planning. So we'll get right into it today. As always, your team here at Baintree dedicated to providing you ongoing guidance and advice as it pertains to your 401k plan and how that integrates with all of the other planning that you're doing. So if you have any questions on these items, there may be some follow-up questions. Please feel free to reach out to us at any point in time via email or by phone. So probably the first place that we'd like to start is to review your benefits and ensure you're making the most of them, not only this year, but also moving into next year, as there will be some changes in terms of how much you can contribute to different areas. So really important and often overlooked area is making sure that you're maxing out your HSA, your health savings account. If you're eligible for an HSA, it can be a very, very powerful tax and savings tool. We kind of call it the Cadillac of all savings accounts, in that you receive a tax deduction for monies put in. They can grow tax deferred, and if you pull them out for qualifying expenses, it can be tax free. So no other account really allows you to do that. So if you're not even sure if you're eligible or you have an HSA, you can check with your human resources department. You can ask us what those eligibility requirements would be, and we can assist you from there. Beyond that, looking at, can you max out your 401k or retirement savings plans? If you're under 50, that maximum is $20,500 for 2022. And then if you're over 50, there's an additional catch up of $6,500, bringing your total up to $27,000. Now, due to the high inflation that we've experienced over the last year or so, revised numbers were put out that pretty generously increased those maximums. So you can see for 2023, that under 50 max contribution to a 401k or employer-sponsored retirement plan is $22,500, with a catch-up moving up to $7,500. So if you're over 50, you can actually get $30,000 in next year, again, if your cash flow allows for that as well. So make sure you review your employee benefits, especially as we look into moving into next year with these increased numbers. Tax harvesting as well. That's been a hot topic this year, given the volatility in the market. So basically looking at strategic ways to sell assets and reap some tax benefits from any potential losses on those assets. And really, you'd want to look at your overall plan. This would not be applicable in your 401k plan, as it is a tax deferred account, but more so if you have after tax investments in the market or in other areas where you can realize some losses and utilize those to offset any gains that you might have in the year, or use them in subsequent years moving forward as well. Also, one thing to be aware of, there's a few things that you just want to make sure you don't make any missteps on. Wash sales, just basically a rule that you can't sell an asset for a loss and then buy it back within the next 30-day window and take advantage of that loss. So if you're trying to still hold on to a particular asset or investment that you might have, just evaluate what your time horizon is on that investment and make sure you do take full advantage of that tax loss harvesting. So a number of ways to kind of make lemonade out of lemons in terms of some of the volatility, again, that we've seen this year, but just something to consider. And if you need some more specific guidance on that, please reach out to us. We don't want you to make a mistake by just doing it on your own if you don't have any familiarity. And always also consult with your tax professional when trying to plan when it pertains to anything dealing with taxes. Another area that is unique to the state of Arizona is the Arizona Charitable Tax Credit. So there's a number of different qualifying charities that you can contribute to that is a direct credit against your Arizona state taxes. So it doesn't mean that you're avoiding paying anything for taxes, but you're more so directing how your tax dollars can be spent. So for instance, If you give $1,000 and you're married filing jointly to foster care, you can use that $1,000 to offset any of your state taxes. So we have a link to this on our website if you are interested. You can always email our team and we can send you a link that describes this process a little bit more and some of the qualifying charities. Just a good way to really direct your tax dollars instead of letting the state decide where those go for you. Roth conversions, another key planning point that you might consider looking at. So basically what a Roth conversion is you're taking any pre-tax money that you might have, so monies that you got a tax deduction via contribution, and moving it, prepaying those taxes into a Roth where it will continue to grow tax deferred. However, if you satisfy the requirements and wait until you're after 59 and a half to take distributions, those distributions can be completely tax-free in the future. So not something you want to go out right away and just say, hey, I'm going to do a conversion, because it does increase your immediate tax liability. So you really want to evaluate, what's your income today? Where do you think it's going to be in the future? Where do you think tax rates will be in the future? And can you benefit yourself in the long run and cumulatively from a tax standpoint to get more into a tax-free asset? So also another tool that we like to use during volatile market periods, because if you can convert assets or investments at a lower dollar value and then they have long-term growth potential and that occurs in that tax-free bucket, you really can benefit from it long-term. Again, something very specific in terms of planning that you want to evaluate for your own situation. So don't go out there and start converting everything you own. Please consult with your tax professional, with your advisor, with us, and we can give you some direction and some key points to look at as it pertains to your situation. Planning for life events. So this would be, maybe a no-brainer, but looking forward and saying, are there any anticipated events that are going to happen within the next year that I really need to plan for that I haven't addressed? So are you planning on purchasing more property or changing primary residences? I know, mortgage rates have moved up quite a lot. So the calculus or that decision-making process is probably a lot different than last year. And there's some other considerations to make in that regard. Are you planning to change jobs? Are you looking for more opportunity? How does that impact your overall plan? Are you making any large purchases like car or appliances that, again, requires evaluation, especially given if you're looking to take on debt to fund those types of purchases? Interest rates were very low for quite a long period of time that we may have forgotten that there is something to be said for evaluating interest rates and cash on hand and things to that nature to find really a sustainable way to fund these purchases. If you have any medical procedures planned, how is that going to impact your ability to work? What's your health insurance coverages? We mentioned that HSA in the beginning. Is it worthwhile to use that money or use other resources? We can help you with those decisions too. And any other life events. And sometimes it's just being prepared for the unknown and the unexpected and ensuring that you have a safe space with emergency savings that you can dip into if you need to. So lastly, some things to review as well. We recommend these are generally done about every year, but your estate planning needs, do you have the legal documents in place that you require to make sure your assets are directed in the way that you wish, in terms of if anything happens to you? If you have kids, can be a very important planning tool as well. Review your insurance coverages, so not just life insurance, but disability insurance, your property and casualty, so that'd be your homeowners and your car insurance. Are you properly covered for what you look like financially on paper? Make sure that there's no gaps in that coverage. And sometimes people are overinsured too. And you might be spending too much money on that. So that's always good to evaluate on an annual basis. And then really, really important one that often goes overlooked is beneficiaries. Make sure your beneficiaries are correct in terms of the distributions that you want for any of your accounts, any of your investments. Also, if you've had life changes, like if you were married and are divorced, or if you were single and are now married, you really want to make sure that those are updated, because the custodian of your accounts, they are going to direct those assets. However, the beneficiary form is filled out. So you really want to make sure you review that on an annual basis. Any questions on any of those topics or how they integrate together, as always, please contact our team. We are here to help you and to guide you and hopefully help you be successful moving into 2023. So, with that, happy holidays. We hope everybody is safe out there and stays healthy. And we look forward to talking to you again next year. Take care.